Hello everyone, welcome to my channel. My name is Cynthia Attara, and today is a special moment because I am going to be talking about the stock market. So for those who are starting to invest, and even for those who are already investing, these tips are going to help you a lot so that you can continue generating even more profits. Now, I am going to be using the board as well as giving you live examples, so stay tuned throughout the whole video and we will dive right into it. Let's go. So let's get right into it. What is the stock market? Think of it as a slice of pizza, little pieces of slices or shares of a company. The stock market is a public market where people buy and sell shares of companies that were previously private and now they are public in order to generate money and growth. Did you know a recession is the greatest time to increase and grow your income? Well, one way to start is through the stock market. Now, I don't do stocks. I don't do cryptocurrencies. I invest using leverage, where I invest with little amounts of money to generate a decent profit of maybe over 200% or so every time I make an investment. So now this is done through a few strategies. The best thing about the stock market when you're using leverage is that you actually can generate profits either when the market goes up or when the market goes down. So basically, you have great chances if you are trained accordingly. So let's say that you have $40 to invest, right? So we are going to use $40 to invest in, let's say, one of the exchange trade funds, the SPY. It's an exchange trade funds from the Standard & Poor's 500. And let's say that you are going to purchase to a future price of an expiration date, let's say next week, because you want that contract when you buy it to have time to develop, so that it gives you time if you buy a contract to have the market go up or either the market go down. So it depends on which type of contract you're going to use. However, regardless of that, let's pretend that you are buying the contract because you want you think the market is going to go up. All right, perfect. So this is what you are going to do. There's a term called the spot price and the strike price. The spot price is basically the price at which the stock is currently. So let's pretend it's at $320, and you bought this contract because you think that the price is going to go up to until 325. Okay, so let's mark it over here, 325. But let's say that during that day the price went up to 335. So this is what it did. It went up, reaching a new spot price of 335. So what happens here? There is a formula for you to calculate your profit because you are eventually generating profit as the market is going up. So the formula is very basic. It's 1 times 100, which equals 100. Means for every dollar, once it passes the strike price, you are actually going to be multiplying it by 100. Why? Because one contract equals 100 shares. Okay? So basically, since calculating now the formula, you are at a spot price of 335, correct? but wait a minute, your strike price was $325. So we are going to calculate the difference between this and this, which is $10. So there's a term called in the money. You are in the money right now with this contract. What does that mean? Again, you do this formula. 1 times 100 equals 100. So because you have $10 difference, you need to multiply $10 by 100. This is $1,000. This is the profit that you are actually taking from investing $40. Now this is completely possible. You could do this in one day. You could do this from one day to another. You could do this between 1 day and 2 days. I mean, you have certain expiration time or date to make sure that this strategy that you're using is working completely. So you could see the power of the strategies that I teach. And now let's say another case that can also happen. Let's say that didn't buy one contract. Let's pretend that you bought 4 contracts, each one at a value of $40. So that's $160, right? Still a small amount, it's still decent, right, to invest. But this $160, but wait a minute, you're still in the money, you're still with your $10 difference, right? But now the difference is that you do not have one contract. This is per contract, but you have 4 contracts. So what happens here? Well, this amount, you need to multiply it by 4. What's the answer to this? 1,000 times 4 is $4,000. Now you tell me if this is not worth investing this. The beauty of it is, again, you could do this if the market goes up. You could do this if the market goes down. So you can do it in a recession. It's the greatest time to do this. There's a lot of awesome things happening right now in the stock market, and a lot of people are not taking advantage of it. So now that you know this, let me take you to a real example. So this is a position that I had with Tesla where I invested just about $600 and I had a conversion rate which was a great profit of about $3,000. So as you can see here right at the bottom, it's a little over $3,000, and I just sold this position. When I go to my portfolio, you can see the new account value, which is now 5,900. This is an awesome strategy, an awesome way to be able to play in the stock market. To start investing is not to lose. People say you win and you lose. I say you win and learn, because to lose is to learn. Psychological, emotional, and strategic control is basically what will make you successful. The dilemma here is not how to invest in or what to invest in, but who is going to mentor you to invest responsibly. If you like this video, I will be posting more videos just like this one. Just make sure you subscribe, comment, and hit that like button. And I really hope that you enjoyed it. And one last thing, I do want to remind you about the freebie. Don't forget to claim your free book.